The 2022 bear market. What will survive? How can we prepare? How can we profit? Welcome back to another video here on the Crypto Juice channel. Disclaimer. None of what we discuss in this video is financial advice. This video is for educational and entertainment purposes only. Please do your own research and contact a qualified professional in the financial sector before making any investment decisions. Thank you. In today's video we will be covering the current bear market and what to expect in the coming future, how we can prepare for it and the possibilities of profiting from this. Be sure to stick around to the end as there is a lot to cover in this video. And you don't want to miss any of it, as there is a big opportunity among us. We're all probably familiar with a bear market, but here's a quick rundown of what one is in detail. A bear market is a period of general economic decline, and it often occurs when the economy enters a recession and stocks start to decrease in value. It often occurs when the economy enters a recession and stocks start to decrease in value. The term bear refers to the way in which the stock market graph resembles the shape of a bear's head and shoulders. The bear market is a natural part of an economic cycle, but it can be difficult for investors who are not prepared for it. In order to minimize potential losses, investors should focus on diversifying their portfolio with stocks that have low correlation with each other. A bear market is a period of negative sentiment when investors are pessimistic about the future of the economy and its financial markets. The signs of a bear market can be found in the stock market. When it goes down, there will be more sellers than buyers. The volume of stocks traded will also decline and there will be more volatility in the market. These are all signs that could indicate a bear market is happening or about to happen. We have seen Bitcoin take a huge plummet in the last few months, as have the majority of the altcoin market and pretty much the whole global market. This is because of the current economic climate, which is, well, in the toilet. It's really bad. So, what's inflation and why is it happening right now? First of all, to fully understand why inflation is happening, we need to know what inflation is. Inflation is the decline of purchasing power of a given currency over time. A quantitative estimate of the rate at which the decline in purchasing power occurs can be reflected in the increase of an average price level of a basket of selected goods and services in an economy over some period of time. The rise in prices, which is often expressed as a percentage, means that a unit of currency effectively buys less than it did in prior periods. Inflation can be contrasted with deflation, which occurs when the purchasing power of money increases and prices decline. So, why is inflation happening right now? Well, in a lot of people's opinions. A large player is of course the war between Russia and Ukraine. Ukraine being the largest exporter of sunflower oil in the world, and since they're at war there is also food shortages. A war in general always causes an economic disaster anyway. And with more countries getting involved, it's clear to see why we are at 80% likelihood of going into a recession and coming into the year of 2023. This ultimately causes price hikes, inflation, etc. In the not-so-distant past, inflation has been very low for nearly 2 decades because of how easy it has been for central banks to stimulate economies with low interest rates and quantitative easing. But now, that's clearly not the case. So, how can you survive the bear market? The first thing that you want to do is quite simply, save more money. You want to save as much as you can in order to have a fallback plan if anything goes wrong in the future. The next thing that you should do is invest in stable assets. This includes things like real estate, stocks, and bonds because they are less likely than other assets to lose value during a recession or bear market. Lastly, if you don't have enough savings and investments, then your best option is just to work harder so that you can save more money or make more investments over time. In conclusion, the best way to prepare for the 2022 bear market is to invest in a diverse portfolio of assets. Investing in a diverse portfolio of assets is the best way to prepare for the 2022 bear market. This will help you be less vulnerable to any single event that might cause a downturn. So, what about the crypto market? The crypto market seems to have taken the biggest hit of all niche markets thus far. But, why? The reason being is that despite the external fundamentals such as just the economy in general, a pending recession, the war, etc., stable coins such as Luna that crashed pretty much 100%, inflicted even more pain and negative price action in the bear market. Three Arrows Capital, a large hedge fund that had to go into liquidation, played a big part on yet again another price drop in the crypto market. However, as we always say on the Crypto Juice channel, we are not worried. We are actually grateful for this opportunity. See, whilst a lot of people are getting lost in the mist of negativity and panic, they get too caught up in the here and now. All the stress etc. causes immediate decisions purely based on emotion, which normally don't have the best outcome. The bear market won't last forever. The next bull run is expected around 2024 or 2025, and crypto is likely going to play a big part in the future of the financial sector. It has already come too far to simply just vanish. However, it is important to know that probably not everything will survive, as we have already seen major negative action in the markets thus far. Job cuts and crypto-related firms going into liquidation. A more positive way to look at this is perhaps to recognize that this is all part of the process of the ultimate development, growing pains if you like. It may have to get worse before it can get better. But, it will get better. So, how will you know what's the best thing to invest in and how to invest in it? Well, in terms of cryptocurrency, which is what we'll discuss now since we're a crypto channel, the best way and very likely the most popular method of investing in crypto right now, as already mentioned, is dollar cost averaging. Dollar cost averaging is a technique where an investor buys equal dollar amounts of a particular investment at regular intervals, regardless of the share price. The investor purchases more shares when prices are low and fewer shares when prices are high. This strategy is based on the idea that markets fluctuate, and over time they will recover from lows as well as highs. The advantage is that it provides stability in purchasing power and average cost per share. The disadvantage is that it may not generate the highest return possible for investors who are seeking to maximize their profits in the short term. However, short-term gains right now is very likely out of the question since we are in a bear market. Because of this, the prices of many cryptos are extremely low and may even fall further. The major benefit of this is that when the next expected bull run comes in 2024-2025, purchasing blue-chip cryptocurrencies such as Bitcoin could return a 5x, Ethereum could return a 10x, and Solana could return a 20x. The reason being is because in the next bull run we're also likely to surpass previous all-time highs. So, Solana for example could have a realistic return of 20x by the time the next bull run comes, meaning you investing $1,000 periodically over the next few months could return a pretty penny of $20,000 in the next bull run. Not bad, right? This of course is educated speculation and no one knows for sure what will happen in the future of the markets. But these assumptions are based on all possible factors and have a strong likelihood. Well, that about wraps up today's video. Thank you for watching and we hope you learned something. Be sure to hit the like button if you enjoyed and subscribe for more daily crypto news. We'd really appreciate it being new to YouTube. We'll see you in the next one.